Hey everyone, here's your market update for today. We will be breaking down the key technical setups for dollar index, crude oil, and gold. Also, tying in the fundamentals that are currently driving price action. Let's jump into the charts. Let's talk about the dollar index. The US dollar is trading close to 103 area in Tuesday's trading session. Last week update labor market data boosted sentiment, helping the index rebound from recent lows. Investors welcomed the remarks of US Trade Representative Jamison Greer before the Senate Finance Committee, where he said the US is in tariff discussion with nearly 50 countries. However, selling pressure re-emerged after the US confirmed that it will impose additional tariffs on China on 2nd of April. Catch the recovery towards 103 last Friday at the beginning of the week. The market is selling the dollar again as stocks, yields, and precious metals falls. This comes after US President Trump said over the weekend that he will stick to his tariff plans, while financial backers and billionaires Bill Ackman warned the president that he is losing the confidence of business leaders. On the economic front, all eyes will be on the week's US consumer price index data. The March inflation indicator will be the first release where the Trump administration may have some impact. In several weekly summaries published on social media, the White House announced that Trump has succeeded in lowering the price of all food items such as eggs, uh, or gasoline at the pump. This can be seen through the upcoming data. The US dollar index is trying to continue to rise on the basis of the rebound on Friday, hovering at the top of the intraday range before oscillating at 103.5. The technical indicators on the daily chart, the moving average convergence MACD signal shows the potential upside push, while the relative strength index remains neutral around 38. Nevertheless, the 9-day and the 20-day simple moving averages still send downside risk signals. Momentum indicators diverge, and the 10-period momentum indicator recommends buying, but other indicators such as the Williams percentage range show neutrality. Therefore, the short-term resistance level this week are 103.53, 103.71, and 104, which is the round number, while the immediate support levels are at 102.75, which is Tuesday's low, 102.5. Today, consider shorting the US dollar index around 103.10. Stop loss will be 103.30, and target will be 102.6, 102.4. So, crude oil. On Thursday, 27th of March, international oil price rose slightly as market participants were evaluating the impact of tightening global crude oil supply and the latest US tariffs on the global economy and energy demand. On Tuesday, international crude oil prices fell sharply despite a rebound in global stock markets, concern about the global recession caused by the escalation of the US trade conflict dominated market sentiment, causing oil prices to fall back to their lowest level in 4 years due to concerns that US President Trump's latest trade tariffs could push the global economy into recession and reduce global demand for energy. Earlier news reports said that Trump was considering suspending tariff for 90 days. White House officials quickly denied the report, sending crude oil prices back into decline. A document seen by Rerouter showed that the European Commission proposed on Monday to impose a 25% counter tariffs on a range of US goods in response to President Trump's steel and aluminum tariff. Goldman Sachs forecast lowered its oil prices forecast. Citigroup and Morgan Stanley also lowered their forecast for Brent. Saudi Arabia announced a sharp cut in crude oil prices for Asian buyers on Sunday, bringing May crude oil prices to the lowest level in 4 months. The current crude oil market is experiencing the concentrated release of multiple negative factors from technical perspective. WTI crude oil continuous contracts show a typical bearish signal in 60-minute to 40-minute and daily level charts, and the trend pressure is clear. On the 4-hour chart, WTI crude oil prices struggled to continue to rise above $72 last week. Prices formed a short top and started a new round of decline, falling below $70. Oil prices fell steadily, breaking the key point of 65.6. The bears even pushed the price down to below 62.1. In the end, the price tested the 58.78 line. The recent volatility low was formed near $60, and the price is currently consolidating its downward trend. On the upside, the immediate resistance level is near the 61.51 14-hour moving average level. Immediate support is around the $60, which is the market psychological level. The next major support for WTI is around $56. If the price breaks down, it may fall to 55 level. Today, consider going long on crude oil around 57.6, stop loss 57.4, and target can be 59 and 59.2. Let's talk about everybody's favorite asset to trade, gold. On Tuesday, although the weaker dollar and escalating trade tensions supported gold prices, gold narrowed its earlier gains as US Treasury yields rose. Spot gold traded near 3,000 on Tuesday, falling nearly 2% on Monday as investors turned to the dollar as a safe haven after full imposition of tariffs by the United States sparked concern about a global recession. However, analysts remains bullish on gold given the dire economic situation. Amid market turmoil, investors turn to cash and other safe haven currencies such as the Swiss franc and the yen, which cause gold to retreat, bringing the risk of a deeper correction. It should be noted that although Fed Chairman Powell did not say that the Fed was eager to resume rate cuts, traders in federal fund rate futures increased their bets on the number of rate cuts the Fed will make this year. Traders currently expect a 95 basis point rate cut by the end of the year, with the first rate cut most likely in June lower than the 122 a base point rate cut pricing a few hours ago. The market believes that the probability of a rate cut in the United States in May is about 57%. Rate cuts will increase the appeal of non-interest bearing gold. Recently, the spot gold price only fell below the psychological barrier of $3,000, triggering technical concerns in the market about whether the gold bull market has peaked. However, the technical indicator has shown obvious divergence on the daily chart. Gold prices have formed a clear upward channel since mid-March, but recently hit the upper track of the Bollinger Band began to fall. After breaking through the historical high of 3167.6, gold prices have shown a typical upward exhaustion pattern. The MACD indicator of the technical indicator show DIFF for 43.46, DEA 48.65, MACD minus 10.39, and the green kinetic energy column begins to expand, indicating that short-term downtrend momentum is accumulating. The current gold price faces multiple technical resistance, among which 3038 and 3055 constitute the main resistance range for short-term rebound. The support below is mainly concentrated in 2972 area, which is the multi-week low hit earlier on 7 on Monday. Now it seems to protect the upcoming downtrend space, followed by the 50-day simple moving average, which is about 2942.7 as a recent low. If it is lost, it may trigger a deeper adjustment. Consider going long on gold today before 2978. Stop loss will be 2974. Target will be 3000 or 3005.